Welcome back, traders, to another video talking about what is going on in markets. We've got the NASDAQ down 0.6% here today. We also see the dollar back to flat. The VIX is up here this morning. And of course, we're seeing follow through to the downside today for the precious metal that everyone has their eye on. That is gold. In fact, actually, gold at the time of recording this is down more than silver. Yesterday, silver was the underperformer. Gold today is actually performing worse than silver. Very interesting to see the least. And we talked about this level yesterday, but take a look at your moving averages on the daily chart. And we have officially tagged the 20-day moving average for the first time in, oh my gosh, I don't even know. Let's take a look. It has been over 60 days since we've even tapped the 20-day moving average. So a very healthy and much needed pullback or correction in gold. The question is for today's video, is that it? Or are we going to head lower and test deeper in this retracement? We'll talk about that. We'll also talk about what's going on in oil prices, making a push higher here today, which of course, oil prices staying low has been helpful to the global inflation story. Bitcoin also holding support around this 108,000 level, and so much more. As we get started, if you could help me out, hit the thumbs up button, subscribe to the channel if you're new. Let's get into it. So for the gold traders out there, yesterday was a pretty rough day if you were on the long side, and a pretty glorious day, or maybe a vindicating day if you've been a bear in what has been a seemingly never-ending upward drift when it comes to gold prices. Yesterday, we had the biggest drop since 2013. I don't know what you were doing during 2013, but I was not looking at gold prices. You might have been, I don't know. But 2013, we had a drop like this, and it's been so long since we've had such a sharp volatility move in gold. But I actually just want to let you know that, of course, I didn't know or claim to have known that this was the top, and I'm not going to claim that at all. But there is something that we talked about ahead of this drop that I think more traders need to be aware of. Even if you're not an options trader, understanding volatility and implied volatility is really important if you're going to trade the markets. And we saw the GVZ, which is a gold volatility index, jumping dramatically before the drop in gold prices. Essentially, the options market was pricing in a huge move in gold up or down coming in the future. So we actually saw that right before the gold sharp drop that we saw take place, we saw gold volatility rise to its highest level in a very long time. So please understanding when volatility is expected to be high can keep you on your toes in regards to your risk management. If you were super leveraged on the long side of gold going into this was probably a very painful and humbling experience. Whereas for people who have been waiting on the sidelines for pullbacks, this is really welcomed. As I mentioned, from a technical basis, the 20-day moving average is finally being retested, which is great news for people who want the gold rally to continue. As a long-term bull, when it comes to gold, I'm definitely happy to see prices pulling back here. I also have a neutral bias on gold at this time due to some conflicting stuff. Technicals, in my view, on the higher time frame specifically, I need to add a note there. The higher time frames still look bullish. Seasonality still looks okay for this month. Trend overall still looks bullish as well on the daily chart. We mentioned we're just now tapping into the 20-day moving average, but at the same time, institutional activity has been a bit mixed. We could take a look at that as well, although we are a little outdated due to the lack of new COT data due to the Commitment of Traders report being delayed by the government shutdown in the United States. Sentiment is a little bit mixed here when it comes to the crowd, and inflation data neutral. Jobs data has been bullish for gold because it's been really soft out of the US, and economic growth metrics have been strong for the US, giving us a bearish reading for gold. So I've been really neutral on gold since we have really not had a strong reading on the Edge Finder in a while. But if we continue to pull back and some of the macroeconomic data starts to suggest bullishness for gold again, let's say we get some jobs data that's not great, or inflation data that supports gold prices, there actually may be an opportunity here to buy the dip. I love the idea of drawing in some Fibonacci retracements on a higher time frame and just kind of chilling and saying, hey, gold's had a wonderful run. Let's see if we can get some lower prices. If the 38.2% retracement gets tagged and we also get some confirmation from the Edge Finder, I may look to buy it there. If it drops further down to the 61.8% retracement and Edge Finder has some confirmation, then I may look to buy it there. But I'm waiting for confirmation because I have too many mixed signals to actually place a trade on gold at this time, but the technicals on the higher time frame still support bullishness despite the short-term volatility that we are seeing. Now, if you're a short-term trader and you're maybe shorting or scalping the downside move here, I would just be careful as you do come into some higher time frame levels of support. As I mentioned, keep your eye on that 20-day moving average, the 50-day moving average, and some key levels of support where buyers had previously gotten very strong around the 4,000 or 3960 level to be more precise. And now that hindsight is in full swing, you can see how pretty this double top looks. The problem with this is that there has been countless double tops that have ultimately broken to the upside since then. I think it's really hard to call something a top until it's actually topped. Then everyone claims they called the top, but not on this channel. You know, if you've been watching me, that I have stubbornly resisted saying like I'm really bullish or really bearish on gold, and I've just remained neutral because, again, I've been saying I think that there's room for a pullback, but I have no idea where that pullback takes place. Again, this, like most people, caught me by surprise, and I just didn't have any positions because I didn't like the idea of chasing, but I also didn't want to short such a strong uptrend, which again had been the right call for the last few months not to short this thing. And when it comes to getting long, the question is, can we get some deeper retracements and some actually good discounts on gold? I know there's a lot of people who are waiting, we're rubbing their hands together looking for an opportunity to buy the dip, and I'm one of them. If you get some sharp discounts and edge finder confirmation, I'm probably in the trade. Let's get back to this move in the NASDAQ, which is a trade that I currently have, and I'm seeing a little bit of the profits that I had on my position wither away a little bit here with today's drop. But I'm not too worried because my system is still bullish on this one. Now, does that guarantee that this trade's gonna erupt through the highs? No, but I am very systematic in what I do, and the edge finder still has strong confirmation for the NASDAQ. So I'm gonna manage my trade in case I'm wrong, but let's just take a quick look at the edge finder's bias on NASDAQ. I'm trading QQQ, which is just an ETF that tracks NASDAQ performance. Switching over on our AI scanner to NASDAQ, you can see it has a pretty high score, getting a very bullish overall bias from the edge finder. We can see technicals, institutional activity, inflation data, and economic growth are signaling from our data that the edge finder still sees the NASDAQ as a bullish chart. And specifically, we're seeing one of the big players within the NASDAQ take a little bit of a nosedive here this morning. What you're looking at is NFLX. This is Netflix stock, which dropped really big after missing their earnings. You can see down almost 10% at the time of recording this. And for those who are interested in stocks, I'm whipping out the stock box today, which is our other product, not the edge finder, but for stocks, called the stock box. And I'm looking at the earnings report tracker just to show you guys kind of what happened here. So Netflix has a track record of beating their earnings. You can see this chart down below shows earnings surprise over time, quarter by quarter. They usually beat their earnings estimates, but yesterday we got a huge miss, and this was the first significant miss for Netflix in quite some time, resulting in the shares getting sold hard. You can see that the expected or yellow bar chart here shows a $6.97 per share earnings estimate, and in actual terms we only got $5.87 per share. By the way, if you want to check out the stock box, the link will be in the description. And speaking about checking out our tools, today is a very special day. We are kicking off free edge finder and stock box week. Here's some information. So if you've been watching my channel for a while, I just wanted to let you know that we just kicked off a 7-day free week for edge finder access. What this means is the edge finder for this in full week, no credit card required, no catches. If you want to try out our software, here's your chance to do so completely for free. Again, there's no payment required, no credit card, no nothing. Just simply join our Telegram channel, which will be linked in the description down below this video. Once you're in the Telegram channel, just find the pinned message here and then just fill out this form. Once you fill out that form, an email will immediately be sent to you with access to the edge finder for you to try out for free. Our team is going to be offering this for a full free week on both the edge finder and the stock box. And if you want to try out the stock box, we'll also leave a link in the description down below. And if it's easier to get access to the Telegram channel through a QR code, simply scan what you see on the screen right now, and that will redirect you to the Telegram channel where you can get your access to the edge finder free week event. Please note this is a 1-week free period and then it ends for everyone. This is only going to be available for a short period of time. And transparently, I'll tell you why we're doing this. We have a huge sale coming up, and I want to give people a chance to try out our tools authentically for a full week, no strings attached, just to see what our tools are all about. If you like what you see and the tools are genuinely helpful in your trading, consider supporting our work by purchasing a copy during the upcoming Black Friday sale event that we have. There's no hidden gimmicks here, no false advertising or secret marketing tactics. We want you at A1 Trading to try out our tools for this week. And if you like them, consider purchasing them in the future. Another thing I have my eye on is the Russell 2000, which is pulling back a little sharper here today, down 1.4%. And I'm watching this from a pullback perspective. If we can get a move down to the 2400 level on RTY, I'm interested in potentially picking up some long positions on the Russell in favor of a continuation of this overall upward trend. S&P 500 also looks good, but again, these things have not pulled back as much, and I'm interested in specifically the Russell 2000 amongst the rest. Again, I'm already long NASDAQ. I caught that dip last Friday and I've continued to hold. I'm looking for an opportunity to, if we can get some higher lows, I'll look to trail my stop loss on this trade, but just managing the position for now. Here's a list of some of our top setups within the Edge Finder currently using the top setups simple view. Again, if you try it out this week, explore the different top setups page because each one of these has an algorithm that might be more fitted to your style. If you're someone who's more interested in focusing on just economic data, check out the top setups eco page. If you want to track market sentiment exclusively, check out the sentiment page. And if you want to combine all of it and get a full comprehensive view of what the Edge Finder is finding, simply navigate to the top setups page, which shows you column by column all of the different things the Edge Finder is considering in its scoring algorithm. Currently, you can see the dollar CAD from a currency perspective is getting some strong readings, and the US indices continue to have very strong scores. And largely contributing to these high scores are things like sentiment, which means crowd is a little bit more pessimistic, technical reads, which means seasonality and price action look good, and economic data, which shows growth metrics have been recently pretty strong for the US economy. What the Edge Finder specializes in is scanning a bunch of data and generating a bias so that we don't have to do all of that by hand all of the time. Let's take a look at some of these currency setups. And I just took a trade on the euro pound, so we'll talk about both of these too. So I'm still long the dollar index through the ETF UUP. So from a currency perspective, I do generally have a bullish bias on the dollar at this time. You can see I'm up about 2,000 bucks on this trade. And when it comes to DXY, I do think it's likely headed if we can especially get a little bit of, depending on what happens with the CPI print, momentum continuation up to that 100 mark. I do still very much like the DXY to the upside for now. And I think we're kind of in a consolidation phase. So if we do start to get to the top end of this, I'd probably be taking some profits. On the FX side of things, specifically to currency pairs, dollar CAD looks attractive to me if we can get a little bit more pullback. The Canadian dollar had some strength this week due to higher than expected CPI prints out of Canada, causing some, again, Canadian dollar to strengthen. So if we get that pullback, I'd be interested potentially around the 38.2% retracement off of this daily chart, looking at dollar versus CAD. Another chart that I'm watching is the euro pound. This is definitely longer term in nature. I'm specifically marking out this idea off of the weekly chart, where we seem to be coming into a key level of resistance right around this 87.36 level, and so far have been respecting it. From a big picture standpoint, I like this currency pair because it tends to chop back and forth over long stretches of time. And so you can actually scroll out and just kind of see the euro pound very choppy. Now it can have some really violent trends in between, but I have a very small short position with willingness to add to it if we head higher from here. So yes, I know adding to losers, that's a big no-no in some traders' book, but for me, with small enough position sizing, I actually like to dollar cost average in and out of currency pairs, and I trade them differently than I do gold, silver, NASDAQ, stocks, etc. Big picture, I am looking for a further push lower, and in the short term, I'm looking for a push back down to this 86.50 level off of the daily chart. We can pull that up. I'm looking for a move down to around this area. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speeds and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. Blackbull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Blackbull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Blackbull to see if it's a right fit for you. Now back to the video. And just circling back to gold as I make this video, you can see we are confidently sitting there at the 20-day moving average. Watch this moving average close, because I think if you close decisively below it, especially if you close below this area of support looking left, this to me would signal that this may be more than a short, brief pullback and could turn into a larger one. I mean, from a drawdown perspective, gold is seeing about a 8 to 9% pullback so far. This is not completely out of the question that gold could pull back further. I mean, just take a look at some of these pullbacks that we've seen in the past. Here's a pullback in gold that took more time, but it was around a similar move. It was around a 9% pullback. But you could get even sharper ones, like from a peak to trough when you have a blow off top. Well, actually, that was about the same. So interestingly, you can have the larger pullbacks, but it seems sort of thematic of gold to pull back around 9 to 10%. And that's kind of what we've seen over the last few years. So could this be a very short-term pullback that we are seeing in gold and price starts to bottom out in this range? I wouldn't be surprised if it does continue to move lower, but I would be surprised to see it completely crash through all the moving averages. So my thought process on it is that as we pull back and consolidate, moving averages, as I said in my video yesterday, I think will sort of start to catch up to price, in which case this would be a correction in time that I think would be really healthy for gold. Again, I'm a long-term bull on gold. I don't have the current signals to enter a trade based on my own personal trading system. From a long-term perspective, I still have gold long positions and silver long positions in other portfolios and accounts. But from a trading perspective, I'm still waiting for further confirmation before taking a trade. As we've had such a one-directional move, you could still have a violent kind of correction in the coming days, and volatility is still very high. So implied moves for gold in the next few days are still very much dramatic. So meaning you could have a very sharp bounce from here or a very sharp continuation to the downside if the options market is correct in pricing gold volatility. What I mean by that is, again, go back to your GVZ. Keep this chart on. If you're a gold trader, I think you should add this to your watch list. Watch your GVZ, because this volatility index is telling you that the options market, which is often correct, thinks we're still going to get big moves up or down. If you find my videos helpful, do me a big favor, hit the thumbs up button, subscribe, and we'll see you guys back tomorrow. Thanks for watching.